morning. It's a day after NAT reported, and we're now going to be watching for Frontline in a couple weeks when they report. We'll be watching to see if we can get some cheap options in there before they report great earnings. Unfortunately, we're going to have to look forward to Q3 now, and being the low season for the year, we're going to see some losses instead of record profits. And that's going to conflict with the longer term view that rates are going to go a lot higher. But it is what it is. Markets are not easy. But right now we're looking at the price of oil, and oil just keeps moving higher. So by the restriction of supply by OPEC Plus and the pickup in demand since March, we're seeing oil prices move back up. And that doesn't help in terms of the storage play in tanker stocks. So that's the challenge. But let's go through real quick and see how everything looks today. As you can see, the vols spiked up here, came back down in oil. If we look at the other stocks on the quick charts, I just want to focus in on what's happening with the longer term volatility today on these stocks. As you can see with Ardmore, they've always lost money. Look at that. And I believe usually these are adjusted numbers. TD Ameritrade tends to report adjusted numbers, not the real number, which really bugs me because the SEC says you're not supposed to lead with the adjusted number. The adjusted numbers, they basically take out stock options and other recurring items like stock options, which the management like to convince you is not a recurring item. But obviously you see the same items like stock options every quarter. Anyway, that's Ardmore. Let's look at DHT. You see the volatility came up in here earlier in the year, and it's come off quite a bit, but it's still elevated from where it was a year ago. So the vols are still slightly higher, and we have the stock moving up, which we discussed over the last few weeks. They're enticing those convertible note holders to convert to shares instead of the company paying cash, and so miraculously the stock is moving higher mysteriously to the benefit of the company. Funny how that happens. We're not supposed to say the stock's being manipulated because that's illegal. Interesting how that happens. Anyway, you're not going to see the same kind of movement in the other stocks, but that doesn't mean anything. Here's DSSI, it's just drifting down. As you can see, when you look at their earnings, they've made money this year and lost before. Now we look at Euronav, their dividend is today. So the dividend on August 18th, what does that mean? Does that mean is that the ex-dividend date? I'll have to consult our tanker matrix. August 18th, okay, and the dividend was 45 cents. So we're going to see the stock drop on the open by 45 cents, and there you go. So we were about 10.20, and that's dropped. Oh good, so we're all getting our dividend for Euronav. So those of us who don't want to hold on to the stock, you can sell the stock today and get to keep the dividend. So that's always nice. We always like to collect our quarterly dividend. And by the way, that dividend was a 20% dividend. Can you imagine? You put all your money in Euronav, okay? You put your life savings in Euronav, and you collected 20% dividend a year on that stock. You could just retire. Now, obviously, I'm being a bit facetious when I say that because you wouldn't want to put that much capital into any one stock. But how many stocks that you know of that can do that for you? Now, here's the reality, okay? They're going to lose money in Q3. Okay, that's the reality. There's going to be great quarters and not so great quarters. But longer term, if we start to see some consistency in rates, these are going to be great companies to own. They actually lost money in October of last year. So, Q3 of last year, they lost money. But then they made 75 cents, $1.05, and $1.21. So this is a better run company that is somehow able to get much higher rates for their ships than, say, NAT as an example. And obviously they have VLCCs versus Suezmaxes, but I'm just saying in general, some companies seem to have higher rates than others, maybe because of the age of their fleet. This is Frontline. Made money last August, lost money in Q3, and then they've made money in the last 2 quarters as well. look at the vols in here. So from April, they've really drifted back down. Now, DHT is still elevated, but look at Frontline, it's all the way back down here again. And then here is the stock getting back up to that 9 level. And then here's NAT. So they reported great results, lost money in Q3, and they've made money in the last 3 quarters. Okay, so again, the only concern is that we have a lot of long positions in here, and they're going to lose money in Q3. We know that. So we got to look beyond Q3 to Q4. Look at the volatility. Volatility's come back down. The blue line is the implied, the purple line is the historical. So from a historical volatility perspective, the implied vols are still slightly elevated, a little bit higher than they should be. And that may be a combination of things, but if this stock drops from 450 down to say 3, you're going to see those vols pick right back up again. NNA, okay, they've made money. They made $2 profit. It's a $5 stock. Vols are low in there. And then Scorpio, they lost money in Q3. They've made money in the last 3 quarters like everyone else, but there's just something going on with that stock. And look at here, you see how when we reached our lows back in March on this stock, the vols were high. Now look what's happening. We're drifting back down and we're not making new highs on vols. Normally you see that in a capitulation move. So when we dropped down to here, that was an indication that we had reached bottom. When you see this, that means we've not reached bottom, because it's not a capitulation, it's not a panic dumping, which is what you normally see. So I'm not holding on to this one. I mean, good luck to whoever wants to try to step in and buy that one. You're very brave. Good luck. But this is not what you would normally see when a stock is drifting down to its low for the year. I'm still struggling to understand this, why it's like this, but I think Q3 we're going to get a better feel as to why people are not excited about this business. I think we're going to see that the business with lost money in Q3, and then going forward, what does it mean in Q4? I don't want to sound negative, but you need to have a skeptical perspective on things, because the CEOs of these companies are always painting the rosiest picture they can. They're not really going to share with you what's going on. The Teekay tankers, they've come back down after reporting, and they reported a lower profit than the previous quarter, which is hard to imagine how that could happen. And they did a reverse split last year, 1 for 8. So again, we don't like companies that do reverse splits, so we don't own any of this stock. Now their NAV is back up to like 28 from 18. So you would think people would be excited, and they're not. So we need to have a healthy dose of skepticism about them now, right? As soon as we get line of sight of the market bottoming, and as soon as we see rates starting to take off again, you definitely want to be ready to buy into these. And then here's TMP. They also did a reverse split. So again, when you see reverse splits, just stay away from those companies. There's too many fish in the sea. Don't go into these crappy companies that do reverse splits. Just don't do it. Let's look at the options real quick. 7,800 calls versus 5,000 puts in oil. Oil's down slightly. The dollar continues to weaken, and with that, the oil prices tend to drift back up. So oil is still firm and not helping the tanker stocks. Okay, now, if we look at Ardmore shipping, 62 calls, no puts. Nothing's happening in there. DHT, so the Thinkorswim platform was messed up yesterday. It looks like we lost some data overnight. So we'll just be looking at the option stats. We won't get to see the biggest. We've got 3,600 calls, 500 puts. The earnings have been announced. So what you see here is that we were short a naked put. I bought that back yesterday at 5 cents. I didn't want to just let the option expire on Friday. I'd rather buy it back for 5 cents. I sold it for $1.15, so I bought it back for a nickel. I got it off the books. Now, you could not buy it back and save 65 cents in commission and make another $5. My concern is convertible notes who could potentially sell the stock down to $5.45 and still make a profit. I just don't want that risk. So by buying it back for $5.65, I've taken all risk off. I've booked my profit. I'm done. If you said to me, well, Uncle Dan, you made money selling naked puts. That's a great strategy. Now what are you going to do? So by right, I should have been rolling this already. I should have already rolled this to September or October. But if you look at the implied vols, they're like 40%. So I'm not going to do it when the vols are low, and I have to get at least $1 in premium. So I'll wait and see if those 6s get back above $1 again. I'm not going to move up to the 7s. Okay, so you could say, well, where can you get $1 premium now? You could go to the 7 strike. But what I'm going to do is keep my gunpowder dry and wait for the market to plunge or drop after those convertible notes have come in and sold their shares. And I'm always going to look to sell at least $1 in premium, because otherwise there's no point. You need to make at least $100, otherwise you're wasting your time. Euronav, that's a lot of calls coming in yesterday in Euronav. And we're looking at 47, 48% in here. So we got the dividend collected today. That's why the stock is going to be lower. But if you look over here at last traded price, what they do is they take the value of the dividend, which was 45 cents, and they reduce the last traded price by 45 cents. So what does that mean? We're trading down, but if you include the dividend, we're actually trading up 15 cents from yesterday for those of us who own the shares and have collected the dividend. So if you wanted to collect the dividend and then sell the stock, you could do that. You could do that right now, and you're better off. And then you could say, was I better off waiting to collect my dividend? The answer would be yes. You made an extra 15 cents by waiting. But definitely a lot of call buying going on in here. So the stock looks good. Now Frontline, we have earnings at the end of the month. So let's look at the September contract. This is a contract that will be impacted by the earnings themselves. So a question from yesterday was, can you help me understand this whole concept? There was that trade that we saw that had a large order, and it was the concept of selling a put and buying a call. This is a bullish strategy, okay? And sometimes people refer to it as a reversal, a risk reversal. Some people use this strategy if they want to lock in profits on a stock without selling the stock to avoid tax. Okay, but we're using it in a different way. We're the other side of that trade. The strategy is the stock's at 860. Let's just say we think Frontline could shoot up to 10 bucks. So we would like to buy the 9 call, but we also know that with their great earnings, there is zero chance that Frontline trades below 8. And if it did trade below 8, we would like to own it. So what you can do is you could come in here and you could sell the 8 put for, say, a mid price at 30 cents. And then I'm going to hold down my control key, and then I'm going to left click on the offer side on the call, and then boom, it's going to add that in. Now, I'm buying the 9 call for 30 cents. I'm selling the 8 put for 30 cents. So what price am I paying? I'm paying 0. So instead of buying this for 30 cents, I'm going to do a spread, and the net effect is 0. So I'm not going to pay anything for this. Now, if I click on the confirm and send button, you can't see this on your screen, but let me just tell you that when you do this trade, the buying power effect is $145 when you do this. Now, obviously, you have risk to the downside, right? So the buying power effect is a negative 145 when you do this trade. If I just came in here and just sold this put 30 cents, my buying power would be $111. So my buying power has gone up to 145, just call it 150 from 110. So your buying power has gone up, and if this stock drops below 8, you will own those shares at 8. But if you look at this company, you say, what a great company, I'd love to own it at 8. But what happens if the earnings are good and it runs up to 10? I'll miss out on it. Can you imagine that you can go in and own the stock at 9? And if the stock doesn't trade above 9 and doesn't go below 8, you lose $0. But if it goes above 9, you have unlimited upside. If it goes to 10, 11, and 12, in the next 30 days, you have unlimited upside. So this is just a different kind of strategy you can use. It's quite intriguing. Just remember, there's no free lunch, okay? So if I just sold the put, okay, for 30 cents and the stock dropped, then I would own the stock at the strike minus the premium. I'd own it at 770. But if I do this trade and it does drop below 8, I'm going to own it at 8. I'm not going to own it at 770. But it's just an interesting way to look at the market, and that's basically what we saw yesterday. So I hope that's clear, because I had a question raised yesterday about that trade. And then here's NAT. So what happened with calls and the puts? Pretty quiet on the day. How is our options doing in there? So we're basically back to almost break even in there with the stock at 440, 443. Where do we go from here? Nobody knows. I've been in the markets for more than 35 years. I don't know. No one knows. This is like the weather, okay? I'm looking out the window and it's raining, and the forecast 2 days ago was no rain for the whole week. Right, so it's hard to forecast the weather. It's even harder to forecast what happens in a stock. So the weatherman is wrong just as often as the market. Scorpio, again, still drifting lower, 1,600 calls versus 800 puts. Pretty quiet in there. The August contracts are still pretty rich, the ones that are in the money, but then again, those are hard to calculate properly with the Black-Scholes model. So I would look more just at the monies. Those are better priced. So we're looking around 93%. So there's still a bit of premium in there. There's probably going to be some people bottom fishing in here. I will not be one of them. Teekay tankers, very little volume in there. The stock is pretty much unchanged, pretty quiet. And then TMP, also very quiet. All right, so those are the option stats that we have this morning. And then we've gone through the charts. And then real quick on our portfolio, what we can see here is we've collected another dividend in Euronav. We're going to collect another dividend in DHT. And that stock is going to go ex-dividend on August 25th. And that's going to be a 32% dividend yield. So great dividend from DHT. So we've collected. So what you're going to see is our puts gone again. So we've sold since April 27th. We've sold how many now? We sold a put in DHT. We sold a put in NAT, and we've made money on both of them. But on the DHT one, we made $110 on that one. The calls, most of the calls that we bought have gone to zero. So just think about that. Most of all the calls have gone to zero. We've made profits on all the short puts. And then on the puts we sold short, we've rolled them into stock, and we still made money. Okay, so the puts where we were losing, we ended up owning shares. So the reason why we own NAT shares is because we were losing on a short put. But our cost basis was $3.95 and the stock's at $4.40. And so we have calls here. We're still making money in these calls, and we're still waiting. The only other calls where we've made money was on Frontline, which is no longer in our portfolio. So the message here really is stay small, be careful when buying calls because they have a low probability of winning if the stocks are dropping. If the stocks are going to go sideways or drift downwards, you're much better off just selling naked puts. And in fact, what I should do is I should be in here selling puts. I should sell my stock and sell my put, just so you can see when it comes to making money, you're going to make a lot more money if you sell naked puts instead of just own the shares. So let me think about that. I might do a trade in there today around that, just because I want you guys to understand how those dynamics play out over time. All right, so good luck today. That's it. We're sailing off from here. Leave questions, comments, feedback down below. Think about subscribing if you want to be a part of our journey on learning how to invest in the market. Thanks.